Today, we're actually going to be talking about a little bit of more DeFi as a whole, right? Understanding what really is involved with DeFi. If you do not know what DeFi is, well, this is a call where you're going to go into something that maybe you've never heard before, but really understanding that where crypto can really go outside of, yes, it's an investment. Yes, it's an opportunity of investment to see portfolio growth and to do that, of course. But there's a lot to do with it because crypto is not just a one-sided thing, right? Crypto is not like the stock market where you just buy and that's it. I mean, even though in stocks you can do different things, but crypto is a whole ecosystem that is really huge to understand. And this is why we have governments. This is why we have so many big institutions being a part of this place. But if you've never heard of DeFi, fam, I want you guys to know that this call is going to be really good for you. It's going to be really good for you to understand and really understanding where things can go and the longevity of it and even things that can happen right now. But put a five in the chat if you're intrigued with the topic of DeFi. Again, it might be new to you, it might not be. Wherever you're at, we're going to be able to kind of come in this together and being able to break it down to the highest of our abilities. But as you guys know, I'm not going to be doing this call by myself. I have my brother John Luke on today's call. Last weekend actually, he was out there in Reno. Shout out to the Reno squad. He was out there with the squad out there, doing some things in person at the event, speaking. Right, I saw the content like fire. But this Saturday we have us together. He's back. You have him for a small amount of time because he might be like in New York next week or like Chicago or like Miami. Anywhere in the U.S. He might be there in the next couple weeks. So stay tuned to different locations. But now, right now, he's in Dallas, and I'm super grateful to run these calls with him because we decided to do this, and we did this call, decided to do it together for the first time, and it's been great. We've been able to have amazing information. Obviously, we have upload on YouTube, so people start to interact and see the recordings. And the biggest thing is we just want to spread what's going on to help everybody get involved with what's going on and really get educated. It's not just to make an investment, but to also get educated. So I'm gonna bring on my boy John Luke. Been doing this for a very long time. My brother, an individual that really cares about individuals, the people on today's call, and really just to spread education and value that we're gaining, and we're being able to help you guys understand as well. So John Luke, bro, I appreciate you being on today's call. I'm happy you're stable today. You're in Dallas. But I'll let you take it away, bro.
Yeah, appreciate it, bro. Appreciate it. Let's put some tens in the chat for Gil, really holding it down when I was away last week. And, I heard really good things about that session. And also, it's just so cool to still be working together 4 years on, hopping on these calls, giving free value, free game for everybody. And so, props to you guys because it's the consistent same people joining. So, you're clearly enjoying it and you're clearly dedicating that time. So, that's why we do this. So what I want to touch on today is, as you know, we start off these calls, as always, with what's going on, what's going on in the markets right now, today. And so we want to give you that weekly news. So we're going to speak about what's going on. We're going to speak about crypto back loans, a little bit of a more advanced concept, something different, the future of crypto, and then, one or two rabbit holes as we like to go down. So, what's been some of the news this week? Well, the biggest one that came to mind was Coinbase partnering, not with Coinbase, but Coinbase partnering with JP Morgan for credit card payments. That was absolutely huge. And so what I found interesting about that is that JP Morgan and Chase working with Coinbase, allowing people to use credit card, sorry, to buy crypto, because that's always been a thing of banks allowing credit card payments into crypto exchanges. That was always an issue. I remember in 2022 when NatWest is a popular bank in England, and that was my bank. And so I tried to use my NatWest card to put money into crypto, deposit it into Kraken, which is a centralized exchange. And literally, NatWest called me. They sent a message and they called me saying, basically, this is super high risk and we don't allow it. NatWest, the bank, told me, the man on the phone said, we don't allow you to use our card for crypto payments. But that's exactly what JP Morgan Chase are wanting to do. I'm going to pull up the article here because this is on the official JP Morgan website. So this is like a press release. And so they want to do direct bank to wallet link, which basically means the bank straight to your crypto wallet type of connection. And so it says here through JP Morgan secure API, Chase customers can seamlessly link bank accounts to Coinbase wallets. So that ambiguous, sort of position of, will I be allowed to do this? Can I do this? Will it affect how the bank views me? That's no longer really going to be the case. And so as it sees here, they are giving access to more than 1 billion people worldwide, which is huge. Now, the next thing was that eToro, which is simply a stock brokerage platform, they're looking to tokenize 100 popular US stocks on Ethereum. And so one of the trends I've noticed is that because of number one, the Genius Act, and the other act that was then set in place as well, you're noticing the competition rise between these traditional companies in getting tokenized stocks out there, in offering their own stable coins, because now that it's regulatory, it's a race to do it the quickest. Because whoever does it first and early is going to get access to the majority of the consumers. And so eToro doing that is definitely a big move. Now, the third point here is that Kraken sees revenue rise of 18% in quarter two. And so it's around about, the past sort of 1 to 2 weeks where companies start announcing what their Q2 results were. As you know, there's 4 financial quarters in a year. And so Coinbase, think about this, right? This is interesting. Coinbase actually saw a 6% drop in revenue in quarter two. So you have Coinbase, one of the largest exchanges, bigger than Kraken, actually drop, but Kraken was rising and increasing. Now, I'm a little bit biased. I love using Kraken. I think it's seamless. I think the CEO is amazing. The CEO has on record stated that he likes when crypto users have ledgers and Trezors, which is hardware wallets, because that is irrefutably the safest place to store your crypto. And Coinbase is good as well. The CEO is Brian Armstrong. Brian Armstrong has fought against the SEC on many points. When the SEC came to Coinbase and said, hey, we believe these are securities, Brian Armstrong's like, no, I'm planting my feet down. Coinbase is a regulatory platform. And so they're both good exchanges, but they're going to have pros and cons. They're going to have different staking percentages on crypto assets that you have. They're going to offer different crypto projects. Kraken might have some of the smaller projects. Coinbase might have some of the larger projects. But as if you're a crypto developer, if you're in the team of a project, typically number one goal is, can I IPO on Coinbase? Right? Can I have ICO, initial coin offering on Coinbase? Why? Because it's the most popular and bigger exchange out there. And for a project, that means the audience is going to be larger for people to invest and get involved in. So there's different perspectives to think about, but I wanted to state that statistic out there. And then number 4 is the revival of NFTs. Put a 10 in the chat if you've ever bought an NFT, and put a 5 in the chat if you've never bought an NFT. Put a 10 if you've bought an NFT, and put a 5 if you have not bought an NFT. I want to see how many of us, 12 in the chat, have bought an NFT. 10 if you have, 5 if you haven't. Okay, so some of us have, fewer of us haven't, or maybe it's kind of like 50-50. And so, me and Gil, man, like, I feel like we could write a book on the 2021, 2022, like NFT craze, because, we were in that, we were like proper doving in. And so I remember watching Asset Accumulators on Thursday by our very own Zach Hogan educator. This guy's been trading for 10 to 12 years, absolute legend in the industry. You see him talking all over the country. But, I remember Zach Hogan speaking about Cardano NFTs. And there was a project called Clay Nation, which is still there to this day. And Clay Nation just like popped off and boomed. And I was like in my college room, like just buzzing, like calling my British friends, like, bro, this NFT just popped off. Like, I got it for this amount and now it's this amount. I'm like, yo, Zach Hogan's a legend, bro. Like, I got in that, it was him. Like, like it was just such a buzz, and NFTs were popping back then. And so there is utility with these non-fungible tokens, right? For those of you who don't know, fungibility is simply the how transferable something is, like for like. And so these NFTs, as you know, have unique addresses in the blockchain attached to each NFT. So the same monkey pick is not the same as your friend's monkey pick, even though they look the same. In the technological side, it is different, and they can offer different utilities and perks. And so the NFT volume recently has been increasing. And it's been increasing with the major projects, the projects such as CryptoPunks, the projects such as Bored Ape Yacht Club. And so why is that an indication that the NFT popularity may be rising? Because in this NFT space, similar to crypto, there's like 13,000 plus cryptos out there. There's even more. And in the NFT space, I don't know how many there are, but I know that it's thousands. Whether it's on the Ethereum blockchain, whether it's on the Solana blockchain, whether it's on the Cardano blockchain, there's a variety, or even on the Bitcoin. And so the major projects, the largest projects in each of those blockchains, everything else basically follows their movement and volume. That's just like a blanket term. Like there's obviously nuances, but that's typically how it goes. And so, as you can see here, Blur, guys, is another big exchange. OpenSea is an Ethereum one. CryptoPunks basically saw like that increase in volume. And so, one of my close friends, who is absolutely massive in the Web3 space, he mentioned to me or not to me directly, but he mentioned online that the NFT volume and popularity is rising. And in this next wave that we see, in this next bull market, when these other altcoins are rising, we might just see these current large projects start to peak in volume again. Volume that we haven't seen for maybe 2 to 3 years. So it's something to keep in mind. One of the things I learned, guys, from that last bull run of NFTs is it is a speculative market. Like we can't forget, this is what we call in traditional finance non-investment grade investments, which basically means that very volatile, high potential ROI, but you have to be extremely selective, extremely selective. And maybe we do a whole NFT class, when things start to pick up a little bit. But Blur, guys, this is basically an exchange that you can get Blur tokens for trading on the NFT platform. So if we look at a project like Jupiter, for example, Jupiter is a decentralized platform, and so you can trade different Solana and more than Solana projects on there. And Jupiter basically give airdrops, right? Like every quarter or two or so, they give airdrops back to people who have been trading actively on their platform. Well, guess what? Blur do the same for NFTs. You get Blur tokens after every NFT transacted on that platform. So there's other benefits with using these exchanges, but I did want to mention about the NFT volume because I thought it was quite interesting. So maybe there is a revival. I don't know. We'll have to see. But let's move on to the next slide. Yeah, we can kind of forget about that. Okay, cool. Yeah, so this is kind of an interesting thing. I mentioned it in Reno, and it was basically like these different graphs and the understanding of the power of where crypto can go. So, this graph here, I want you guys to put in the chat, right? I'm just really curious here. Do you think this is a graph showing A, showing B, or showing C? What do we think, right? And this is kind of alluding to the power of crypto and the scarcity element. Do we think this is a graph showing A, B, or C? Does this look like the price of the dollar, the price of Bitcoin, or the purchasing power of the dollar? What do we think? A, B, or C? Let's have a look. C, C, C. Oh, you guys are already, yeah, you're too good. You're too good. Yeah, this is C. This is the purchasing power of the dollar, right? You can see it just like consistently decreasing as the years go on, right? Basically, ever since the gold standard occurred, I'm not going to get the exact year right, so I'm going to say 1960s. I know that's going to be close enough, where basically the dollar fiat was no longer backed by gold. So, there's no longer like a limited supply of it. And so that's why we see the depreciation of it. This chart here, what do we think? Is this going to be A or B? What are we saying here? Is this A or B? Put in the chat, A or B? B, B. Yeah, 100%. This is B, guys. This is the price of Bitcoin. This is a price. I had to crop out like the Bitcoin part of it, but yeah, and you can see it's a consistent, basically uptrend, right? Like there's a quote that says, "When in doubt, zoom out." Maybe you're looking at like, I don't know, like we've done this before, like as traders and investors, right? You're looking at this part and you're like, oh my gosh, like that's really scary. You're looking at this part, you're like, no, like, Bitcoin's dead, like it's never gonna come back, and it's just like booms, right? But if you zoom out, come out of the small time frames, go into the last time frame, look at Bitcoin from a 5 to 10 year perspective, and you're like, oh my word, like the most profitable asset class, pretty much in history. And so that's one thing that you can keep in mind for the times that things are maybe bearish and not going your way, right? So that's one thing I wanted to mention. And so let me come off of this annotated thing. There we go. Cool. And then the final thing here is obviously the price of the dollar for the past basically 11 years. 11 years. And so where the dollar is at right now, that's a whole conversation. I don't know, maybe me and Gil chop it up and speak about the DXY later on in the call, but definitely something that is looking like it's falling. And so there's like points of interest where it can definitely react off of. But I think it's fair to say that there is an inverse relationship between the dollar and the Bitcoin in general, right? Like generally, when the dollar is falling and depreciating, we're seeing people go to more speculative assets or more riskier assets because they're like basically risk off at that point, right? And so that is definitely the price of the dollar. So let me get rid of these markings actually. Clear all drawings. There we go. That's how you do it. I'm learning. I'm learning. Cool. Okay. So one thing that I wanted to touch on this topic is basically crypto-backed loans because I think it's something that we've never really dove into and spoke about. And also, even though it's maybe a more like intermediate advanced topic, and even though it may not be something that you're looking to do today, like right now, it's something which has like significant benefits. And I'm a big believer in speaking about things that you might not be in a position to do today, you might not be considering it today, but 2 to 3, 4 years from now, that might be something you execute on. I mean, like prior to 2021, I never thought about getting involved in NFTs. Like, I just thought it was a joke. I thought these artwork things are silly. I saw no utility with it. But then all of a sudden, 2 years later, I'm invested in it, like fully in the deep end of Web3, right? So you never know what might happen. And so, we're gonna go over like some kind of topics that I want to simplify for you guys. It's my first time, I guess, like teaching it. So, we're gonna go through it bit by bit. But let's break it down with this, all right? So the very first thing to understand is that there's a difference between a secured loan and an unsecured loan. Okay. A secured loan is something that is backed by something. There's something that you give to the lender as a protective measure. And so a secured loan is like a property, right? Real estate. Why? Because your real estate is that collateral or something like a car, right? Like your car, the car gets seized, the car gets taken away if you don't make up your monthly payments, right? And that's a secured loan. But an unsecured loan is what? It's like a credit card, right? It's like you have, a credit card. It could have revolving credit, it could have different terms with it, but there's nothing backing it. And so what's the difference with unsecured and secured forms of loans? Well, secured loans typically have a lower interest rate, a lower monthly payment, and unsecured loans typically have a higher interest rate and payment. Why? Because with a secured loan, the lender, the bank or the institution, they can take away that asset if you don't make up the payment. With the unsecured, they can't. That's why the interest payment is very different. So this is a type of secured loan. And you can use your crypto as collateral to basically borrow money. What are the advantages? Advantage number one, you get access to cash without selling your crypto. Like, think about it. Maybe it's I don't know, maybe it's like coming up to the bull market in crypto and you're like, hey, I want to take out cash to to make a payment for something in particular. Well, you don't want to sell your crypto for that because we're stepping into a bull market. Your assets are going to appreciate, but you want to be able to like still have some form of liquidity to pay off or pay whatever it is that you need to do. So that's why this could be a good option. The next thing is tax efficiency. When you're borrowing against your crypto, it doesn't normally trigger CGT, which is capital gains tax. So whether you're running as a business or as a 1099 or whatever your form of entity or thing is, there's tax benefits to not selling. And that's what you can utilize from loaning. The third thing is you get to retain ownership of your crypto. The crypto you put up as collateral, as what the institution or bank keep, and they will seize if you don't make up that payment, right? It's kind of like a comforting measure for them. You still own that crypto. You still keep ownership of it. You can still potentially have the private keys to it. And that's a big benefit. The next one is minimal paperwork. And then the other one is potential to leverage your holdings. And the other one is flexible payment terms. I mean, like, put a 5 in the chat if you've ever made a traditional loan. You've ever made a loan with a bank, whether it's a loan for your property, whether it's a loan for student loans, whether it's a loan for like a large payment, a loan for a vacation, like hopefully not, but you never know, right? Like put a 5 in the chat if you've ever made a traditional loan. Many of us have, guys, like student loans, property, car, like whatever it is. And so those loan terms are very like stringent, like they could be strict. They're not very flexible with you. Why? Because maybe it's the credit score, or maybe it's because you don't have much history. Like You know what's annoying, right? Have you ever like gone to a bank or something, an institution, and one of the first thing they say is like, you haven't got much history. Like you've not got much payment history, you've not got much transaction history, like so therefore your interest rate is going to be X amount. It's like, how can I get history if I never start? You know what I mean? It's like you're looking for a job and you go for these job interviews, and every single job is like, well, we want you to have some prior experience. It's like, how can I get prior experience if you never let me in the door? It's impossible, right? Like I need to get some form of experience. It's so true. And so it's the same thing with traditional loans. In crypto, the terms are very flexible. I'm going to speak in a little bit about this company called Arc, which my friend is the BD manager there. And so, the terms that are within that, you can kind of curate it a little bit more for yourself. They work with you. And so that's what's really interesting. So before I dive into like, one or two websites, we got to break down some key terms. These are key terms in the loan lending space. Okay. The first one is rehypothecation. Rehypothecation. When I went to Permissionless which is a crypto event in New York, this was a topic of discussion for certain individuals because rehypothecation is where they lend the collateral funds to a third party. Okay, so often this is how it used to be, and some companies still do this. But the way that these lending companies are making money is you lend them 100K in Bitcoin, for example. Now you're thinking like, okay, like great, I keep the private keys, like it's there ready for when the loan terms end and I can get it back. No. Often they rehypothecate those funds, they actually lend it out to another party, and then they're making double the fees. They're making fees off of you and they're making fees off the third party because they're lending what was lended. Do you get what I'm trying to say? And that's scary because if they lend it, which has happened so many times, like there's a company called Alameda and FTX. The FTX and Alameda had a lending agreement. Well, FTX went bankrupt. So if your lending company lends to another company that has a bad balance sheet and the money's gone, then your loaning terms after 12 months or 24 months, they're up. You're like, hey, company, like I've paid my terms, give me back my money. And they're like, I'm sorry, but we lent it out. And you're like, what do you mean? Like I need it now. And they're like, well, no, like that company we lent it to, they're no longer around anymore. I'm sorry, but these are the terms of the agreement, right? This is the risk that you take on board. And you never knew this. So make sure you try and go for companies that do not conduct rehypothecation. The second thing is the term collateral. Collateral. What does that mean, right? It's simply an asset pledged as a security. It's basically what the borrower, which is you, for example, is giving to the lender as protection, and the lender will forfeit it if there is a default. And a default, as number 3 says, is basically where you fail to make the monthly payment on your loan. So, it's just like traditional finance, right? It's just like having a property. If you can't pay your mortgage repayment every month, then eventually you may default on those payments, and the bank will say, hopefully they work with you, but maybe they'll say like, hey, like actually, we don't believe you're in good financial stead to pay us back. We got to seize the house now. Like that's like worst case scenario. But that's an example if you can't make back these payments on your crypto backed loan. Number 4 is LTV. This is a key term. It's called loan to value. Now, loan to value is basically the percentage of what you're loaning compared to what you're getting back. So, for example, if you're loaning, like let's say you're loaning one Bitcoin, 130, like $130,000. Let's just say it's worth 100,000 to make it simple, right? Like, let's say your collateral is one Bitcoin, which is $100,000. The loan to value percentage may be 60%. Right? The institution may say 60%. That means that you can only get back in your loan, you can only loan out $60,000 from your one BTC, $100,000, which is used as collateral. Other companies may say, you know what? Your collateral is one BTC, which is $100,000. And we believe that you got a good financial stead. You're not based in New York or Texas where like crypto regulation is like really strict. You're based in like friggin' I don't know, where's like a crypto friendly state. Maybe you're in like Florida, for example. Yeah, Florida, right? And so they're like, because you're based in Florida, because you have a good financial stead, we're gonna give you a loan to value ratio of 70%. And you're like, great, that 100K Bitcoin used as collateral, I can now loan out up to $70,000. Whereas in Texas, I can only loan up to $60,000, right? So that's like an example of what the difference will be. Other factors come into play with the LTV ratio. But now I'm going to show you one or two companies or one or two examples. Okay, so this is kind of like this company's called ARC, ARCH, and so this is just an example, right? Like one BTC. Let's say BTC is 100, like $130,000. Their LTV is 60%. And let's say your loan terms are 24 months. That's 2 years, and so then your loan amount is you qualify for $70,000, and the APR, which is the percentage payment on a yearly, is 12%. But guess what? Things can change. If you want your loan duration to be 12 months, which is 1 year, what's going to happen to the monthly payment? It's going to go up, isn't it? Because the loan's shorter. What's going to happen to the LTV ratio? Maybe it decreases slightly because the risk for the lender is higher than if it was for 2 years. Because in 2 years, you have a longer period of time to make up your payments. But in 12 months, you have a short period of time to make your payments. Put a 10 in the chat if this is making sense. Oh man, I'm speaking way too quick. I'm trying to improve on my speaking. I know I'm speaking too quick here, but I hope it's making sense. Put a 10 in the chat if this is making sense. Maybe it's the coffee. I had this coffee. Maybe it's got me buzzing. But if this is making chat, put a 10. Put a 5 if you're like, I need a little bit more help. I feel like I'm going mad right now. Put a 10 if this is making sense, guys. Just so I have an idea. Put a 5 if you're like just a little bit more of an explanation. Let's have a look. Let's have a look. Let's have a look. Okay, okay. We have a few people here. Well, the good thing is, are we recording this? I hope we're recording. I don't know if we are. Yeah, we are. Okay, great, great, cool, cool, cool. Sounds good. 10, 10, 10. Appreciate it, Alan. Good to know. Good to know. Okay. So let me show you guys a quick example. I'm noticing the time as well, so I don't want to go too deep. But let me show you over here. Okay. So this is the website that I was referring to, for example. And so let's just go over here and give you guys an example. So as you can see here, Bitcoin's $113,000. I put up one Bitcoin as collateral, and 60% is the max that I can get. 60% is the LTV ratio, right? So 60% of 113,000 is $67,000. Now, guess what? With Ethereum, they have a different LTV, and with Solana, they have a different LTV, right? They have different crypto projects that you can go into. As you can see here, where are you located? So your location is going to change the payment terms slightly because, as I said, certain states, number one, have different average incomes, but they also have different regulations regarding loaning and crypto. So 12 months is what I've put here. And on the right side, this is the summary, right? That's my collateral. That's my loan, sorry, that I can take out. This is my annualized percentage rate, the APR what I have to pay back. This is my monthly payment based upon that APR. And this is what we call the origination fee. Okay. Whenever you take a loan, a crypto-backed loan out, there's always going to be an origination fee, which is a one-time payment by the lender based upon your loan amount. A one-time payment by the lender, typically based upon your loan amount. And so, for example, over here, we can see that the loan amount is 67K. Well, what's 1K? That's basically 1.5 to 1.8% of your loan amount as an origination fee. That means when you click continue and you proceed with this loan, you have to pay that upfront, like right off the bat. Sometimes that's deducted as it mentions here. Sometimes it's just deducted off of the total, but sometimes that will be a one-time thing. So this is an example of what a loan is going to look like, guys, a crypto-backed loan. And as I mentioned, there's many positives about it. And so those positives, as I mentioned, are up here. And so that's key to know. Now, the purposes for these loans, you're like, why would I even make a loan like this? Like, why put myself in that level of risk? Well, here's the thing. Number one, you may be using this for an investment, right? This is a risky strategy, but some people do this. Some people you do something called rolling their debt, which is basically where they make loans on top of loans. And when the loan gets close to the maturity date, which is the end of the loan, they then basically get another loan and use that new loan to pay off the old loan. It's an advanced strategy, but you may be using this, number two, for large purchases. Maybe there's a a car you need. Maybe there's something else you want, and you're like, hey, like I need the fiat, but I don't want to go to a bank because the terms are going to be bad. So I'm gonna put up my crypto as collateral. Maybe it's a large purchase you're making. Number three, another purpose may be day-to-day finances. You may want to unlock liquidity from crypto, but without selling it. Because maybe you're a little bit over leveraged, let's be honest. Like maybe instead of it being like 10% of your net worth in crypto, maybe you're like, a little bit of a DJ and you have like 30, 40% of your net worth in crypto. And you're like, I don't want to sell it because of the market we're in. So I'm going to use a loan and that's how I'm going to leverage things for my day-to-day finances. But the number four purpose is maybe it's for debt consolidation. And it's basically the fact that you can pay off your debt in a more suitable way for you through crypto-backed loans than in a traditional manner. And so maybe you want to pay off credit card debt. But guess what? The interest rate on a credit card is higher than the interest rate if you're doing a crypto-backed loan. So you're like, let me use that, leverage it, and pay off the credit card. So that's like four purposes that you may choose to utilize these crypto-backed loans. And yeah, it's something that I want to keep in mind. Now, let me show you an article, guys. Like you're probably thinking, like, why, this is risky, this is maybe scary. Who else does this? Guys, Elon Musk. Elon Musk. We all remember when Elon Musk bought X, right? He bought Twitter, acquired it, and turned it into X. Put a 10 in the chat if you guys remember that. When he turned Twitter into X and he acquired it, like big money. Like put a 10 in the chat if you remember when this was in the news of Elon Musk buying Twitter. Amazing. So you guys remember this. And so, you know what Elon Musk did, guys? He borrowed money from SpaceX. He had a $1 billion loan from his SpaceX company. And guess what? The same time he took that loan out was the same time he took ownership of Twitter in October 2024, I believe it was, which is crazy because even Elon Musk is doing strategies like this. The wealthy are, and they're taking loans out from one entity and putting it into another entity. And then guess what? He's paying back the SpaceX loan, probably with the proceeds from X, with the profits. So this is a strategy, as I said, many people, utilize out here. And so let's go back to the PowerPoint and sort of round things up. So this is the benefits, pros and cons of a crypto-backed loan compared to a traditional mortgage or even a traditional loan. There's less red tape, there's less paperwork, the approval is quicker. I mean, think about it, guys. You got to get your credit checks. Like when I went to get my car recently for lease, they had to do a credit check. Based upon my credit was going to change the monthly payment that I have on my car. Well, in crypto-backed loans, there's no credit check, right? That could be a pro or a con, but generally it's a pro because that means that regardless of your history, you can get given money to then leverage in the way that you want to. So I want you to keep that in mind, guys. This was a mini training on something a little bit different. Put a 5 in the chat if you guys feel like you got some form of value. I hope that was useful. We're gonna upload that part to YouTube, of course. And so right now, I'm gonna pass it over to my man Gil, because I know he's gonna dive in, the future of crypto, a little bit about rabbit holes. And I'm going to be plugged in, may contribute here and there. And so, guys, make sure you're tuning into the second segment, where Gil is definitely going to give some game here. So I'm excited to hear what's going on, my guy.
Yes, sir, guys, and keep the fives coming because honestly, Jean-Luc put a lot of value on what he just went through. It was a lot of information, and it's honestly something that majority of people are not getting educated about. So honestly, literally, shout out to you, Jean-Luc. I already know you're always prepped and have everything set to go. But literally, guys, the information that he broke down is honestly very informative. And like you said, right, it might be something that you're not going to do like right now. But one thing I've always learned is this. Before you do these big moves, before we, get to where we want to be, because we're all going to be getting there on today's call, is understanding is how can I already know what to do when certain plays are in play, right? Like put a 1 in the chat if you already kind of want to know what to do when there's XXXXX in the bank, right? You already know how to leverage. You already know how to borrow. You already know how to do this. You already know how to do that. And that's something that I did myself. When I first started in crypto, I didn't have funds to invest with. I learned for 6 months. I educated myself for 6 months in our community. And then the stimulus check came, $1,200, and I was able to buy Ethereum. But if I wasn't educated before that money came, I would have been scrambling and maybe I would have missed that opportunity because Ethereum went crazy. It went from 1,200 to like 5K in like a couple months, right? So it's important to be educated before maybe you even apply it. But what I'm going to go through, I'm not going to spend too much time because John gave a lot of game, is I'm basically going to come in here and talk a little bit more about DeFi, right? I want to talk a little bit more about DeFi, but I also want to give you guys some insight and some things we can add on to kind of what John was saying to finalize today's call. Now, the first thing I want to show you guys is this, something called DeFi Llama. Now, when it comes to DeFi, right, DeFi stands for Decentralized Finance. Now, on a day-to-day, if you know it or you don't know it, we use traditional finance, right? Today, I literally bought, coffee, and I bought, some tacos, right, with fiat using my card, right, using my bank, or it was credit card, using whatever, right? So that transaction is traditional finance, right? If you have a loan, right, a car loan, like Jolene was saying, car loan, a house mortgage, a student loans, whatever it is, right, that you took out a loan, you're using traditional finance. Traditional finance is something that we use on a day-to-day basis. Like literally, there's a lot of people, right, that still only use like non-traditional, they use cash, for example, but majority of individuals use the traditional finance that we have today. Now, DeFi is something that is in crypto. DeFi is decentralized finance. So it's similar things that you can do in the traditional world, just outside of the traditional system, right? Outside of using the banks, outside of using the middleman. And DeFi is something that became very big back in 2020, 2021. It was the first time it was even talked about, the first time it was even kind of put out there, right? It was an open of a new world that we saw that existed in crypto. Because every single bull market, every single wave, we start to see there's new things that we start to learn about crypto, that it's way bigger than just an asset class. Again, it's an ecosystem. That's why it's called Web3. It's the upgrade of the internet. It's a blockchain technology where there's a currency attached to it. That's why it's completely new, and that's why it's a huge game changer. Now, DeFi Llama is where you're able to look at the numbers on how much money is in certain protocols or certain things in DeFi. Remember, decentralized finance. It's kind of imagine if you're able to look at, I don't know, your local community bank, right? Or JP Morgan, and you're able to see how much money they're loaning out right now. You can't do that today, right? We can't log in and say, okay, let me go look at the numbers of JP Morgan right now. Let me go look at the numbers of Bank of America. You can't really do that because it's a private thing that they have on the inside. But in crypto, everything is public. And DeFi Llama is a place where you can come in and see the numbers of how much money is being lended out, how much money is being staked, where the money is going. And you can use this in so many different ways. I'm not going to go too crazy into it, but you can use it to see, okay, what is going on in the markets, right? You can see if there's more money being lended, well, that means people are taking collateral, using money, or if they're staking it, that means they're holding it, right? There's a couple of key things. But what I want to go into first is the biggest one, the biggest DeFi protocol is Aave. Aave, in a very simple sense, it does very similar, if not exact, what Jean-Luc just broke down with that one, which I never seen the one he showed. So that's a good one as well. But there's one called Aave, which I would say is the biggest one, where you're able to borrow and lend crypto. Now, again, same thing like Jean-Luc just broke down. I'm not going to switch too much into it because you already into it. But I just wanted to show you guys this one because Aave is somewhere that it is a little bit, it's way more decentralized than probably the one he showed, which the one he showed is probably a little bit more secure. But this one, the difference is more in your hands. You have to add your wallet, right? MetaMask, Phantom, you have to attach it. You have to basically play the game. And I want you guys to know this. The reason why DeFi is good opportunity, but there's ups and there's pros and there's cons, right? The pro is that there is no middleman, meaning you don't pay the middleman. There is not, that's why these numbers are way lower. Because as you can see here for Ethereum, you can also supply Ethereum. You can also, like, imagine you saying, there's something called a CD, right? Put a one in the chat if you've heard of a CD at a bank, right? Where you put your money and, they're depositing your money for a certain amount of time and they're actually able to do whatever, even though they do that normal account. But anyways, they pay you a percentage, but it's locked up. Same thing goes with DeFi protocols like Aave. You're able to supply Ethereum and you get paid 2.55 for just supplying Ethereum. So Ethereum, remember, it's still volatile, still going up, whatever it is. And now you're earning interest for supplying it to this project, right? This database, this place, which is Aave. Now, the other side of it is borrowing, right? You can also borrow money, like John Luke was breaking down. In this example, the average APY right now is 3.2%. Guys, that is very low. I don't know exactly what home, let's say example, home loans are right now. I know car loans, can be crazy depending on your credit, but this doesn't depend on your credit. This doesn't depend on where you're at. This doesn't depend on your cash flow. This doesn't depend on any of that. It just depends on the collateral, right? It's how much you're able to collateralize, and they're actually paying up to 93%. Like you're able to borrow up to 93% of what you're putting in, right? Your collateral. Remember, you still own it. They're just holding it for you. They just hold it for you to show that, hey, until you pay me back, you get it back. But here it's 93%. And it changes, right? The interest rate changes depending on how much percentage total of LTV you're taking out from your collateral. So let's say, for example, you're taking out 1 Ethereum, or let's say 10 Ethereum, right? And you just want the exact 93%, right? So 10 Ethereum, you gain 9.3 Ethereum in loans, right? Probably in USDC. You'll do whatever you want with it, but you're paying a 2.88, right? Interest. That's really low. Now, I want to give you guys a perspective here, okay? There's something I was doing, earlier today. And I want to give you guys a perspective real quick to give you guys a real example on how this can really change the game. And myself, I think this is something that I might be doing in the next couple of years to take advantage of this opportunity. But put a 10 in the chat if you're looking to buy a home or looking to get a mortgage in the next couple of years, or put a 5 in the chat if you already have a mortgage, you already have a home. So put a 10 in the chat if you're looking to buy a home in the future, right? 10 in the chat if you're looking to buy a home, put a 5 in the chat if you have a home right? You already have a mortgage. So I'm going to give you guys some cool things, a cool concept that really intrigues me a lot. Now, I'm going to give you guys this example, okay? Let's say, let's pick a name on here. Let's say my boy Alan. We have Alan on the call, right? Always being on it. Shout out to you, bro. I know you're out there in Reno. Alan, right? Let's say Alan, okay, wants to buy a home in Vegas. Let's say he's like, nah, I want to go to Vegas. I want to get a home in Vegas, right? Let's say Alan, okay, wants to get a loan of around like 90K, right? But he wants to use that for the down payment of a home. You just say he wants to use it for the down payment of a home. Okay. Yes, he could, if he has the cash, cool. But a lot of us, let's say he doesn't have the cash and he doesn't want to take out traditional loan plus the mortgage, right? For that down payment. But imagine if he had 150,000, and let's speak it to existing, right? He had $150,000 worth of Ethereum. Okay, let's say he had 150K in his portfolio worth of Ethereum. And he's like, okay, well, I want to be able to take out this 90K loan, 90K, so I can put it as a down payment. He is able to come in something like AOV. And let's make this, because these numbers can change, right? Let's say the LTV, let's just say the LTV is 60%. Let's just put the example. Let's say the LTV is 60%. That means if he deposits 150K worth of Ethereum, he's getting back 90K in USDC. Okay, so he's getting a loan of 90K. Now remember, that 150 in Ethereum stays in Ethereum. In Ethereum. That means if Ethereum doubles, he has 300K in there, but he doesn't owe 300K. He only owes what he borrowed in USDC, in dollars. Put a 1 in chat of that to making sense. So like John Luke is saying, you're able to borrow off for something that is appreciating. Is actually going to be able to grow, right? Which is wild, because imagine you're able to do that for a home, and then you have it and you add it on top of your mortgage or whatever it is, and you hold it for 30 years and you're paying back maybe the deposit, right? And in 30 years, Ethereum, let's say Ethereum is at $1 million and you just whatever X'd, and that was, you were able to take out that loan when it was still appreciating. Right now, there's pros and cons to it. There's, if the things go down, if Ethereum goes lower than where you collateralize it, it can collateralize you out. You might have to deposit more. I don't want to go too much into it, but this is a really cool way, that you might be able to take something, right? Take your portfolio that you're building, let's say in the next 10 years. Let's give a long-term perspective. I know some of you guys are young on today's call. Maybe you're 20, right? And you're 30, you'll buy your dream home, right? Let's say by then you already have $500,000 or 300K in your portfolio. Now imagine if you take that as a loan and then you buy a home with it and you're paying less percentage, because imagine it stays similar, right? 2, 3, 4%. right? APY, it's staying lower. And remember, the cool thing about it is that now you still have your crypto. And you didn't have to use anything in the real world. You don't have to use anything in traditional finance. You're losing everything from crypto because maybe you have that in BTC, right? So these are concepts that I know might go over your head, but these are cool different things that we're able to realize. I know there's a lot of things we can look at. There's a lot of different ways to play this. There's a lot of ups and sides, pros and cons, but it's a really cool concept. Now, what I also want to give you guys is this before we end today's call. I got two more things for you. I don't want to make it too crazy. I got two more things. Number one, actually three more things, is other ways you can earn in crypto, other ways you can use DeFi. Now, one of the examples in Solana, like put a 5 in the chat if you're in Solana right now. You're in the project Solana, or you heard of Solana, right? Every blockchain has its own things you can do in it, has its own DeFi. Aave is an Ethereum, okay? It's an Ethereum project, right? Radium is a Solana project. Here, what you're able to do as well is something called liquidity pools. Very simple concept, right? Radium, Uniswap, these are decentralized exchanges like Kraken, like Coinbase, where you're able to exchange crypto, right? You're able to exchange crypto here. It's cheaper fees and it's way quicker because it's off of traditional. Remember, it's not traditional finance, it's decentralized finance. But imagine if you're able to be a part of the liquidity pool. So what you're able to do is this. You're able to right now, right? It's a 24-hour APR, so it changes, right? But right now, they're paying 30% APR. Okay, they're paying 30% APR if you deposit Solana and USDC. Now, that is being used when people are transferring from Solana to USDC, which is very popular, right? People transfer from Solana to USDC all day long, right? You can see that there's $25 million in this liquidity pool right now. They're paying 30%. So if you deposit $100 of Solana and $100 of USDC, you have to deposit both. Now you're a part of the liquidity pool and you're earning 30% of that on an APR, yearly kind of stance type of deal. So you're earning crypto for providing it to this liquidity pool. That's another example. You can do this on Radium. You can do this on Uniswap. These are things that I want every single one of you guys, if you've never guys heard of, to start go seeing, because as the bull market starts to come, this is where the opportunities lie. Because when the markets are already moving and the markets are going, okay, yes, holding is cool, but imagine if you have your crypto to work while it's growing. And then when it's not growing anymore and we're taking profits, then you take out your profits. But it's understanding that there's a lot more opportunity. And this is why crypto created so many top earners in the world, because they understood certain concepts that maybe a lot of people didn't. Okay, so put a 3 in the chat if this makes sense, right? So liquidity pool is another way you can provide liquidity and earn back. Okay, now the next thing I want to talk about, and kind of going back a little bit what Jean-Luc was talking about, I'm kind of just touching on Jean-Luc, what he was talking about, is NFTs. Now, I'm not going to go too much on NFTs, but I do want to tell you guys this. I believe, okay, this is just my belief. Don't take this for word to word, but this is just Gil's belief. I believe that NFTs have been saturated, okay? And not many people are going to be paying attention to them in this next run. But I think it's going to be one of the biggest things used in the normal traditional world. Now, here's an example. Put a 10 in the chat if you know about the World Cup coming in 2026. Put a 10 in the chat if you're familiar with the World Cup coming in 2026. Okay, put a 10. If you don't know about it, well, the FIFA World Cup, the biggest tournament in the world, literally, the most watched, billions of people watch it, is coming to the US, Canada, and Mexico, right? But I'm showing you guys this. What they're doing to release tickets, okay, this next World Cup is actually through NFT packs that already actually got, like literally already got sold, that they're now in the marketplace for hire. And what they're doing is this. Now, imagine if you buy a pack, right? Let's say the road to the final, let's say Team Mexico or Team Mexico, Mexico City. So they have a pack here that's called Team Mexico, Mexico City. And when you buy this pack, they're going to give you a certain amount of tickets. I think 2 tickets. Okay, you have the right to buy 2 tickets, right? Because the tickets are not out yet, but you're basically being a part of like the early stages of the release of tickets. But it's only for the game in Mexico City when Mexico plays, right? Now, when you have the right to buy these tickets, they're randomized tickets. But just want to show you guys this for a reason. These were NFTs. Why? Because they had a total supply of 20. They were already all minted, and the price was 2,800. Now, anybody who bought this pack, they're gonna sell it for way more. They're probably gonna be selling it for like 10K type of deal. To be honest, like this World Cup is looking to be insane. Not gonna lie, from what I'm seeing, right? But why I'm showing you guys this, because FIFA is one of the biggest, biggest. It's actually a nonprofit, which is wild to me how they're structured. That's a thing for another day, right? But FIFA is one of the biggest, owners of any sports, because FIFA owns all the sports, all the soccer in the world, right? And they're releasing tickets using NFTs. Why are they doing this? They're doing this because it's a lot easier to release them because it's all in the blockchain, right? It's not something that they have to update. They have to go in and see the numbers. No, it's already encrypted in the blockchain. Nobody can steal it because every pack has an encrypted code, right? Has its own address, right? Has its own thing that you can't really change. It's the security of it, which is why people like FIFA, things like FIFA, are using this on a day-to-day basis now. And it's wild because people are going to be buying these things. People are going to be buying tickets for the World Cup and not even knowing that they're buying NFTs. Literally, that's what they're using it for. But the thing is this, most people got oversaturated in it. And now the real players are going to start using them because they learned from it. They say, wait a second, this can actually be used. This can actually be done like this and like that. So looking at NFTs in a different horizon, but understanding that this technology is going to be used more and more and more. And this is my theory. And this is what I'll end it with. Is my theory is that crypto as a whole, when it comes into full, like decentralized, when stable coins come in and you start using stable coins, we as the average people, not us, but average people won't even notice that they're using crypto. They won't even know because of how seamless it's going to look like. But literally is already going to be in everything. The passports, your ID, they're going to be NFTs, right? You're using stablecoin at Walmart because you're using Walmart stablecoin. You're paying with Amazon stablecoin. You don't even know, but it's because it's already going to be better with a lot of things, fam. So with saying that, again, I didn't want to go over time on today's call, but I wanted to touch on a couple of things when it comes to DeFi. Put a 9 in the chat if you got some value on today's call. Put a 9 in the chat if you got some value in today's call. I hope you guys got a lot of game. A lot of information I can do. Again, it will be recorded on our YouTubes as well, so you can watch the recording. Now, I was going to talk about this, but I'm going to leave it for next week, okay? I'm going to leave it for next week, but I want to talk about next week. If you guys are down with it, I want to talk about a little topic, right? And I've talked about it before, but I want to go a little bit more in depth, like way more in depth on, yes, tokenomics, but maybe certain myths in certain projects. Because I don't know if you guys have been seeing, put a 1 in the chat if you've heard this. A lot of people are having on TikTok, on Instagram, on X, right? And they're pumping XRP, right? They're saying XRP to 100, XRP to 1,000, XRP to 1,000,000, right? XRP to the moon. And I'm not saying XRP is a bad project. It's not. It's really good, right? But I want to break something down next week. So I'm going to give you guys next week, right, to pack out this call. And we're going to talk about on if XRP can reach $100 and if it cannot, right? There's numbers behind things. There's numbers behind every single project that people aren't talking about because they're not educated. They just want the FOMO. They want to get people in or whatever it is. They're trying to sell you something. I don't know, right? But there's something behind the numbers that's super wonderful in crypto that lets you be a lot more knowledgeable than the average person. So I'm not gonna say it on today's call. I'm not gonna say, yeah, XRP can reach 100 or it cannot. And some of you guys might know, some of you guys might not know. But I'm letting you guys know that next week we'll probably be talking more about if XRP can reach $100, certain projects that people see going to certain levels. Can it be there? Is it possible? Right. So we're going to go into that next week. Put a 1 in the chat if you think that's something that you would be interested in learning about or getting more of a deep dive in certain things. We'll probably go through some projects, talk about the numbers, why they can reach certain levels, maybe why they cannot reach certain levels, and be very honest with things. Because at the end of the day, men lie, women lie, but numbers don't lie. And that's something that I love about crypto is that it's all in the numbers, familia. So we're saying that. I appreciate you guys for being on today's call. I'm excited for next week. Stay tuned to everything that we're doing within the community, guys. Stay plugged in because right now is the best time to be involved with a community that we have here. And what we're doing is definitely next level, guys. So again, hope you guys have a great weekend. I'll see you guys next Saturday. Peace.